Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I just want to do a quick video on one of the companies you guys asked me to look at recently, and I'm going to give you first what the company does, the financials, and then I'll tell you the valuation side of things, and then I'll explain to you what I will do with this company, of course. And this is a bit of a news that I also want to share with you guys. But before we do that, as always, if you could like the video, subscribe to the channel, that will really help the channel. There's about almost a 40-something% of you guys that watch the videos regularly but are not subscribed, so I would really appreciate if you could do that. As well as that, of course, you can join us on the Patreon account where you get access to the buys and sells, the dividend trackers, you get access to the Sharia compliant investing ebook, as well as the Discord, inshallah. Right, the company we're talking about today is called the Supermicro Computer. This company is, as you can imagine, it deals with a lot of the basically develops and manufactures high performance servers, storage solutions, and so on. Basically, they develop this type of products. As you can see here, these servers, the warehouses of, they call the racks or whatever, so rack scale solutions. So this is basically what they develop. So other companies then can buy it from them, and then of course set up their own data centers and so on. So of course there's a lot more to that. And if we go back here, you can read it, you can pause the video, you can see it there. So solutions ranges from complete server storage systems, modular blade servers, blades, workstation, full racks, networks, devices, and so on, so on, so on, so on. As you can see here, the company has 27.7 billion market cap, so it's a large company. They don't have any dividends yet. Earnings per share, as you can see, is growing up nicely. Free cash flow per share is very choppy, very weird. It's up and down, but in the last couple of years, basically since 2013 and then 2012, and then next month, basically they are expecting it to go up, which is quite nice. So earnings per share growth is almost, again, for the last 3 years has actually been okay. Sales growth has been okay. In terms of buying back their own shares, they're not doing that. They're diluting that shares. And again, these companies do so. They've been around over 10 years, I think. So they're not really a new company, if you like. But there are a couple of things I want to talk about here. Total sales, as you can see, is beautiful and it's heading the right direction. But there's something that I want to share with you guys first. And is this part here. So we see the total revenue here. Okay, the cost of that revenue right now, as you can see, is basically from 2.8 in basically they made about $3.3 billion in 2020. 2.8 of that basically was the cost of that revenue. To make this type of product is a capital intense basically product, so they have to spend a lot of money making these things. Look at this, they made 7.3, or let's call it 7.4 billion dollars in trailing 12 months, but they spend about over $6 billion of that. So they're just keeping about 1 billion, 1.2 there, 800 million, 500 million. So it's basically using a lot of the money that they're making. Basically the top line is going back to basically the cost of that revenue, which is not something I actually like. And if you look at the net income for the last couple of years, so you say 84 million, and then look at that, it's kind of it's a little bit all over the place, but it's, of course, it was up, and then yeah, again, it's heading the right direction, but it's not for a company that's making $7 billion. You would expect at least the net income to grow a little bit more than that. Now, in terms of free cash flow here, is very important. Again, as you can see here, it was a negative free cash flow, and then it was a positive, then it was negative. Now it's a positive again. So yeah, it's just a little bit all over the place right now. Right, so going back here, as you can see, total sales, we've seen it's going up the right direction. This is why sometimes it's not, you need to look at the total sales against basically the cost of that revenue as well. So return on equity, we're looking at about 32% right now. Return on invested capital, 31%. Operating margins of 10% and a free cash flow margin of 9%. So not bad at all. Net debt to EBITDA right now is almost non-existent. So that's absolutely fine. One of the reasons this stock is up so much is because of that AI, because of the fact that it works with the Nvidias, the AMDs, the Broadcoms, all of these technology companies that I've got, especially with Nvidia and AMD. They have been working with them, and I will show you their revenue, basically their latest revenue in a second. But a lot of that is because if we go back, actually, in fact, here I'm going to show you for the 1 year, it's up 611%. So it's up a lot. Okay, year to date, 80%. Since January, beginning of January up until now. So it was at 1.284, and right now we're looking at 500. And a lot of that is because of just a couple of things going on. I will talk about it in a second, but yeah, it's crazy right now. And so when you look at the revenue, it will make sense. Okay, so they're expecting the earnings in 2024 85%, almost 86% growth in terms of EPS, and then 13% after that, and then 10%, 11% after that. And in terms of revenue side of things, from $12 billion to 15 to 14 to 16 to 22 to 26, and then 26, and so on. So you could see here, there's a massive growth in the next 2 years, 3 years, and for that reason the stock's probably done really well, and because of that side of AI situation going on. And looking at basically the report that they've actually sent today or yesterday, as you can see, they straight away here they're talking about the companies they work with. So continued development with and NVIDIA, blah blah blah. So they're talking about the chips that they're actually using in those data centers that I've used. So a lot the companies that they work with are the AI companies, and they've talked about that to highlight it. And for that reason, I'm sure it went up. As soon as you see next generation AI designs and this, anything to do with AI right now is just going to the moon. So there's a bit of a highlight in there. I just want to share with you where the main revenue comes from. Again, as you can see, they work with NVIDIA, Intel, Broadcom, AMD, and so on. But two segments of their business, that's what I want to share with you guys in a second. There you go. So server storage systems and the subsystems. As you can see, majority of their money comes from server and storage systems. The accessories and the subsystems is actually very, 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 very small. And vertical markets, as you can see, is getting squeezed a little bit here. They basically, the top part there, the 5G and telecom and the edge Internet of Things and so on, is basically literally getting smaller and smaller by the year. But the rest of it looks okay. So a lot of it, they basically revenue depends on the server and storage systems. Again, there's nothing wrong with that, but it's just it's not as well diversified as I would have hoped for this type of company. Because if these companies decide they no longer want the product from this company, then of course then they're in trouble, right? Because the majority of their revenue comes from there. So the recent quarter, they've actually reported $3.66 billion, which is absolutely huge in comparison to where it was last year, basically this last quarter, which was basically $2 billion. So again, not bad. A lot of their revenue also comes from just the US. 18% comes from Asia, and then Europe, and other comes basically 3% and 8%. There's a bit of a decline when it comes to non-GAAP gross margin, as you can see here. Q1 and now the Q2, basically there's a bit of a decline there. I'm not sure why that has happened, but yeah, it seems the last 3 quarters has actually been declining for a while now. And also, according to Yahoo Finance, as you can see here, the analyst is basically expecting about 14% growth here. Next year, they're expecting every single year, they're expecting almost 40% every year for the next 5 years, which is huge. And as you can see here, the average price is $401 per share, and current price is way ahead of that, so it's almost $500. So it's way ahead of where they think the price should be right now. According to Morningstar, as you can see here, fair value is $594, current price $493, so it's about $100 basically dollars up from where we are now, fairly valued according to them. And looking at their performance in the last 3 years against their competitors, the HPQ and HPE, both of them, as you can see here, the company has returned 1,471 in last 3 years, and 19% and 27%. So it's actually has been it's crazy when you see something like that in comparison. Look at that, 3,189. The S&P 500 was only 83 and 31%, and almost just 2% for the HPE here. So it's actually a very high growth stock right now. I'm gonna explain to you a couple of issues that I found while I was trying to do a little bit of research on this company. And the first one I want to talk about is this. I'm not sure if this has been resolved. Okay, so January 11th of January 2023, there was this article that was written where there was some sort of investigation, potential claims against the Supermicro process, microcomputer. The investigation concerns whether Supermicro and or certain audit officers have violated the federal securities law. That's never good. That's a never good idea. I would like to know what happened after this. Okay, I haven't found out an article that explains exactly what happened after this allegation. Another one that I found, okay, was the FCO, okay, Chief Financial Officer, in connection with widespread accounting violation. This was 2020, and then I think at some point in 2020 something else happened with the company. So this was still an ongoing thing. I'm not sure how they resolved this. Just looking at this article, this is never good. Internal accounting controls to accurately record revenue. Okay, as a result of the orders found in Supermarket improperly and premature recognize the revenue, including by recognizing the revenue on goods and sent to warehouses but not yet delivered. So they're basically charging customers before they even send, shipping goods to customers prior to customer authorization, and shipping misplacement of goods to customers. The order also found is misuse its cooperative marketing program, which entitles customers reimbursement for portion of the cooperative marketing costs according to. Okay, so this is, I don't know what happened with this. Okay, I don't know. I'm sure they have settled this, and I found this article within their website. I think this is probably them telling us they have actually settled. That under the terms of settlement and consent settlement, the company will pay 17.5 million civil penalty. So I'm assuming they've settled that situation. Okay, for me, this is a red flag because although it happened a while ago, I would love to know exactly what has happened, who solved it. I'm not a lawyer. I'm not going to look every single document, but to me, this is a red flag because this is once you hear companies are sort of manipulating their revenue and so on, they can easily go down 10-20%. We've seen that recently with other companies. So for that reason, I genuinely would not be interested in this company. There are other better companies out there. It seems very, very overvalued now. Basically, although these guys are saying it's fairly valued at the moment because of the AI and everything else, I wouldn't touch it. Personally, that's my own opinion, but there are a lot of people that love this. Okay, almost everyone here is actually saying it is a buy, is undervalued, and so on. And looking at this, you can see Wall Street is actually saying it's a buy. If we go to Wall Street, you can see right now it's about 7% in decline. They're expecting a downside basically from now on. So it's still expensive stock, and there's some issues in the basically previously. So for that reason, I wouldn't touch it. I'm gonna leave it alone. If you guys own it, of course you know what you basically own. Do your own research. Make sure you find out. Find out what happened with this. Is it, is these people still around in the company? Again, this was just me typing a couple of words on the Google that I just found this straight away. So there might be other things like that. Recently, I started doing more of this because I'm sick and tired of hearing companies like 3M and J&J have lots of issues with legal situations going on. So I'm trying not to buy companies that have issues. Even Cummins had some issues recently that has been solved. Anyway, I'm going to stop the video here. If you're interested in this company, please do your research, find out a bit more information about the company. I just wanted to give you guys my opinion, just give you some facts about the company. Hopefully you enjoy that. If you do, please like the video, subscribe to the channel. Have a wonderful day.